This is Dan Dix here, reporting for Press for Truth, and yes, you read that title correctly. Italy is on the brink of a revolution, and the big bad banksters better watch out. This just out from Zero Hedge. Salvini calls for elimination of Italy's central bank. Prison time for fraudsters. On Friday, in a moment of predictive insight, Bank of America correctly warned that the greatest threat to EPS, i.e. markets, in the next 3 years is an acceleration of global populism via taxation, regulation, and government intervention. Just 1 day later, this warning to the financial establishment was starkly manifest in that ground zero for Europe's populist revolt, Italy, where the country's coalition government hinted at where the global populist wave is headed next when he slammed the country's central bank leadership and stock market regulator, escalating its attacks on establishment figures ahead of the European parliamentary vote in May. Salvini, the outspoken head of the anti-immigrant League Party, said the Bank of Italy and the Consob, the country's stock market regulator, should be reduced to zero. More than changing one or two people, reduced to zero. Or in other words, eliminated, and that fraudsters who inflicted losses on the Italians' savers should end up in prison for a long time. So this is shaping up to be something quite exciting, I must say. And joining us on the line to help us understand this and break this down is Lior Gantz. Lior, thank you for taking the time to join us here today to help us understand this. What do you make of what's happening in Italy right now? And more specifically, can we see this lead to something like what we saw in Iceland not that long ago, where they literally jailed their bankers? Is that the potential fate of Italian banksters now?
Well, we'll see what happens, right? It's a country that has endured many revolutions in the 20th century and has even hung, one of its leaders not too long ago. So, and if we're comparing this time to any other time, it would be the late 30s. 2008 could equate to the Great Depression that led to financial depression around the world. Central banks came in. If you remember, even FDR came in and made gold illegal, confiscated gold from citizens in the United States, and then revalued it to be worth, instead of $20 an ounce, $35 an ounce, basically telling people to take a huge haircut on their savings after confiscating their wealth. Then central banks cut interest rates. That I'm talking about the 30s. Mm-hmm. I know it sounds familiar because it happened again right now, but this is the 30s we're talking about. Cut interest rates, stimulate the economy, and by the late 30s, you had a huge wealth gap. You had youth unemployment at high rates. In one country in Europe, which obviously everyone knows what I'm talking about, their youth population was steered in other directions and for other agendas. And then in 1939, when many loans were supposed to come due, instead of paying them, one country went off to war. And it doesn't mean that it will happen again, but there is a rise in populism. And the reason for it is you can see it everywhere. Look at the U.S., for example. Unemployment rates are at 3.9%. That's a 60-year low. So, and that's official stats. Obviously, you got shadow stats, John Williams, who I greatly respect, with other data, and there's other data out there about what we call people that are in between the chairs that have given up on employment, and therefore they're not in the statistics. But regardless, we are seeing sort of peak capacity for the U.S. economy, and still with peak capacity, you got 75 out of 150 million people, working class people, earning $30K a year before taxes. So there is no middle class economy in the United States, and if it's going to take about 2 or 3 years to get 15 million people that are on minimum wage to bump their wages to about $15 an hour, and you see it's a country, and you're in Canada, you know that in Canada the minimum wage situation is even worse than in the US, and in Europe the youth unemployment is even worse than in North America. So around the world you see a huge divergence between what the fiscal policies, the monetary policies of the central banks have done for 10 years, which is to prop up asset prices, keep inflation levels very tamed, and then and the rich enjoy this situation, benefit from it. And so politicians are attacking the rich. They want to tax the rich. The rich benefit from this situation, but they don't create it. Creating it is central banks around the world, and that's why the Italian Deputy Prime Minister Salvini is looking to go after, for example, the regulators and the central banks, because they are the creators of the system. They didn't. The wealthy in every country are wealthy because they adapt to the system better than other people. I'm not talking about the elite, the ultra rich. I'm talking about your everyday, person that has no ties to politics. He just happens to have a large portfolio of stocks and real estate and has enjoyed this boom. He has no angle in this. We're not talking about the true elite or something like that. That, to me, is one basket with the central bankers. And yes, what they've done basically in 2008, that favoritism to bail out the institutions that should have just went down, and we should have had just a crisis. Probably would have taken 2-3 years, but you would have gotten much better regulations and much better interest rates that support the general population and don't support inflating asset prices. If you go back in this country to the Civil War, they had a gold-backed dollar and a greenback that the North, started to print. The greenback went to zero a few years later, and instead of a subprime mortgage crisis with lots of lending to that industry, you had a boom in speculative railroads. Railroads were the thing in the 1860s. And then Wall Street came to Ulysses Grant, who was the president back then. They told him, "You got to bail us out. Wall Street is going down, and the rest of the country will go down as well." Well, luckily, the dollar was backed by gold, and there was no income tax. He didn't bail them out. 30 days later, Wall Street, calmed back. It went. It became calm and regulated and regular again. And about 3 years later, the depression was over, and from 1875 till 1900, actually, the United States had its biggest boom ever, and its biggest affordable boom. In other words, there was a price deflation because of innovation, GDP growth, and people were able to afford more. There was a slew of philanthropy. The rich were, creating libraries throughout the U.S. What happened in the 1990s and the 2000s is you had GDP growth, which is good, but you financed it with debt. So actually you had price inflation. And whoever Dan came up with that spin called positive inflation, he should get a Nobel Prize for science fiction, because there is no thing as a positive inflation. What should happen because of competitive forces and because of innovation is price deflation. You should see prices across the board for things going down because they become more efficient and more affordable with GDP growth. Now that's healthy for the economy. What you're seeing now is erosion of the middle class. You're seeing favoritism towards one demographics of people, because the top 10% own about 90% of the equities in the United States. And that is a rise of populism. When you have 90% of the population saying, "Hey, whatever this capitalism is, it doesn't work for me," that creates populism. We wrote extensively about this, Dan, especially for your audience, which I know is very sophisticated. I wrote a number of PDF reports, special reports that are about this situation. If you go to wealthresearchgroup.com/attack/drama and /dead, DEAD, you're going to see 3 reports, great for a weekend reading of something where you understand the root of the cause, the cause of this situation, and what you can do about it personally, because we can't change the entire global financial system. Even shows like us that bring people to awareness to it, but we can adapt to what's going on and not suffer from it.
Well, let's talk a little bit about the Italians who are adapting, and they've been doing the right things, like storing up precious metals, silver, gold, things of that nature. Now, you mentioned back in the 30s, they literally confiscated the gold from the people. And now there's talk going back and forth between the minister there in Italy. This just recently out, as Salvini proposes seizing control of Italy's gold reserves from the central bank. Italy's populist de facto leader Salvini seems set on shaking Europe's financial establishment to the core, one day after the Italian deputy minister and leader of the League Party called for the elimination of Italy's central bank and the country's financial regulator, saying the two institutions should be reduced to zero, and more than changing one or two, but reduced to zero, in other words, eliminated. It was then that he proposed this. And now this just came out today. The economy minister, Tria, says only the ECB can use Italy's gold. He says on Monday that nobody could use Italy's gold reserves other than the European Central Bank for financial operations. So what do you make of that? Do you see them coming after people's gold? And it's interesting that they're making a distinction between the two, gold being owned by the people or the central bank. What are your thoughts?
Yeah, I think that's a key point. So with Salvini's talking about getting the gold back to the people, and he's making the separation between the people and the central bank, which is very important, because what he's telling the people is, hey, the central bank is not us. It's not part of us. It's part of the other camp. Look, Italy is a G7 country, so it's one of the biggest economies on the planet, and it is in a huge decline. But the size of the economy is big, and whatever happens there is going to trickle into the rest of Europe. So whatever happens there it will not happen in a few days. This will be a long, drawn-out thing, like you see Brexit dragging in for a few years here. It's a big country, it's a big economy. But Italy is a leader in terms of Europe. It's the third largest economy in Europe after Germany and France, and whatever they do is critically important. Now, this is not the only country that is obsessed with gold right now. Russia has cut treasury holdings by about 85%, and basically its entire foreign reserves are in gold. China has increased its foreign reserves, has limited its foreign reserves to the dollar and increased gold position. Hungary's bought gold for the first time. You heard about what's happened with Venezuela and the Bank of England. A lot of the countries that are emerging in Eurasia, where they're finding the largest amount of oil and natural gas and lithium, etc. This region that's part of the One Road, One Belt initiative for China is also buying a lot of gold. In fact, all countries except the unaudited Federal Reserve are buying gold right now. So it takes me back to where Bank Bernanke replied to Representative Ron Paul when he asked him, why do central banks buy gold then? And Bernanke said, it's a tradition. Well, it's more than a tradition. It's a strategy. At this point, the central banks are buying gold at a faster pace than in the past 60 years, even before we're going back to the Nixon shock of 1971. So it's important to understand that this is going on in the background, and this is going on at a time where the stock markets are actually rallying. They're having their best open to the year since 1991, and the dollar is actually strong. Back in 2018, it was the best performing asset class in the world. That has happened for the last time then in 1969, 2 years before they had to devalue it, the biggest devaluation of all time. So I think what is happening right now is very akin to what happened in 1969, where Charles de Gaulle, the French president at that time, and other ministers, other prime ministers around the world said, well, gold at 35 an ounce? That's a bargain. I want to redeem all my dollars and get gold. And obviously the United States had to default. I think that's what's happening this time around as well. The prime ministers are in the central banks around the world saying gold at 13.20? That's incredible. I'll convert my dollars into gold right now, because we're not living in the same planet as we did in 1971. If you look at the gold to silver ratio and also the gold to dollar ratio, the gold to dollar ratio sits at about 7% right now. So in other words, 7% of the currency supply, according to the official statistics of what's happening in Fort Knox, etc., it covers about 7% of the currency supply. So with a minimal 20%, the standard, the classical gold standard, the price of gold will be now about $3,900, so triple what it is right now. If you take the 40%, which it used to be the reserve ratio for many years, then the price will be 6 times what it is right now, so about $7,800. And obviously, if you want to cover the entire currency supply, which happened for a few months during 1981, then you're looking at 14 times today's price, and 1,300 times 14. I don't know. It's a lot. It's around $18,000 an ounce. So and this is just in U.S. dollars. You can do that separately to every other currency. In fact, in 70 currencies, Dan, the gold is trading at an all-time nominal high. 70 currencies. So yes, in dollars, it's not trading at an all-time nominal high, but in 70 countries, it is. So it's just important to understand how the measuring stick is important here. That's one thing. Now, the gold to silver ratio is another huge matter. You see it at 83 to 1 or 82 to 1. That's very rare. If you look at wealthresearchgroup.com/rally or /ratio, those two reports are talking about how rare it is that we see a 80 to 1 ratio gold to silver. Historically, many people have talked about this in the past, 16 to 1, etc. In ancient Roman, was about 25 to 1. The gold coin was worth 25 times the silver coin, and until they debased their currencies and mixed lead in there and copper into their coins. The same is happening today. Silver has been demonetized, and because it's been demonetized and used so much for industrial use, you see it just trading above its mining cost. It doesn't have any precious metal premium to it. I think that's about to change radically, like we saw in 2011. The fact of the matter is that the Fed is now cooking the books openly. They've just did the following three things. They've announced that negative interest rates was an effective tool during this recovery period. 2, that they might go on a perpetual QE strategy from now on and not just use it in times of crisis. And I know I'm breaking ground here with you. And 3, they've just announced that they might be changing the way that they measure inflation. So we all know that they've moved energy costs and food costs out of inflation. And what they're fearful, get this, they're fearful that the population is getting used to low inflation too much. And so they want to make sure that they target inflation in a way that they can eclipse it. In other words, what they would like to do is show official numbers that show even lower inflation, and therefore the inflation in the economy would be higher. They want to target, for example, 1%, and that it will end up being 2%. So people will spend more, and the money velocity will increase, so that they and their friends can make more money. So the Fed right now is cooking the books openly. We wrote about this in a timely report that we just issued. I know we had so much feedback coming in inbound emails about this topic. So if you go to wealthresearchgroup.com/Fed, you can really get into the nuts and bolts of this. But they are cooking the books, and I think we are headed for a very different environment in the months ahead. You can only see it's a bubble. The stock market doesn't rally as it is right now without the Fed saying, hey, we're stopping our tightening cycle. This is the major reason for it. So I think that's critical. And whether or not Italy would be aggressive on trying to get us gold, from what I know about the culture of that country, and I've visited Italy about once a year for the past 6 or 7 years, I can tell you their politics are the politicians are relentless, especially the ones that we're talking about. And if they have a way to stir to rail a cage, they will.
Well, it brings up a couple questions for me then.
Sure.
Is it time to look into going back to a gold standard, and if so, how can that be achieved? And also, have you been watching the France Yellow Vest movement? And I'm curious if that has maybe triggered other Europeans like the Italians, and do you think we can see that Yellow Vest movement spread across Europe?
I think it might. So France is a leader in terms of thought in Europe for many, many centuries, and again, it's another country that you've seen its capital city You used to walk on corpse when you walk the streets. There are so many revolutions that have taken place in the streets of Paris and throughout France. It's a very socialistic country, and it's definitely in the same mindset as Italy and Spain, Greece, countries in the that have a huge unemployment rate for their youth, that are fed up with the corrupt politics of the country, and it very well may spread to those countries as well. I think there's a problem when it comes to these European countries, that their demographics are horrible towards growth. They have a very large aging population that is supported by a working class, and the working class is being overtaxed. In fact, you've seen cases in France where people denounce their citizenship and want to move to other countries, because when you have 45-year-old postal workers that retire at the age of 45, and they get physiotherapy at the expense of the government. If you have back pains, even the taxi to take you to the clinic is financed by the government. It's a very socialist country. Other countries are the same, in Europe, in various degrees. Now, when you look at a gold standard possibility, I think what's going to determine whether or not we ever see that again, obviously, one is if we have a huge currency crisis, that's going to create so much backfire from the population that, yeah, we damn right might see that again. Remember, this is an experiment for the past 47, 48 years. We've never seen a situation where all governments have been on fiat currencies without redeemable qualities to their currencies. And secondly, what's really going to affect is what will happen with the de-dollarization. So in the year 2000, about 72% of the world's currency was dollars, and about 50% of it was outside of the U.S. Today, it's about 62% of the world's currency, so it's been de-dollarized. The euro has taken a bigger part, and the renminbi, the yuan, the Chinese currency is picking up more steam gradually. And then also you're seeing that only 40% of the world's currency, of the world's dollars, are outside. So you see a situation where dollars are going back to the U.S. because other countries are dumping their treasuries. So you are seeing a very big dollarization. Now, here's how you should view this, and here's how everyone should think about this. Sometimes people are married for 30 or 40 years and they're not happy. They're disgusted with each other, they hate each other, but they don't break the family unit because they're afraid of the consequences. They're afraid of divorce, they're afraid of being alone, they're afraid of many things. So out of convenience, they stay for many, many decades, more than they would have in an ideal world. That is what's happening right now with the dollar. Nobody wants a currency crisis because all countries have dollars, and obviously this will create riots and rebellion around the world. Now, could it get out of hand? Do couples get divorced? Yes, but if possible, they would love to make sure it's an orderly scenario where it's not a currency crisis. Now, that doesn't mean, and that's what Wealth Research Group sees. It sees in the next 5 to 7 years probably a 20 to 25% decline in the purchasing power of the dollar. So we are talking about a 4 to 5% a year inflation for the U.S. currency, and that's big. We haven't seen that in many, many decades for the U.S. currency. In the 90s, it was about 3 to 4%, which is higher than today. We're talking in official numbers, and obviously in the 70s, it was the worst. So we will see higher inflation. I think the big reason for it is because the U.S. is now having to finance $1.1 trillion in annual deficits, not the budget. The deficit itself is 1.1 trillion for the coming 10 years. They will need to issue more bonds than they originally thought. And with Trump basically renegotiating all trade deals and all foreign affairs, I don't think that other governments are going to be as thrilled to lend the Treasury Department in Washington 40% of its budget, which is what they're doing right now. So I think you're going to see some currency printing, some inflation coming out of that, and that all of that coming in the next 4 to 5 years with the election of either Trump again or a more populistic and socialistic president. All of that combines to a real inflationary crisis, sort of a stagflation that you saw in the 70s. So how should you play this and how should you invest it? That's exactly what we're talking about in the newsletter, in the free newsletter at wealthresearchgroup.com throughout the year. In fact, a company that we just profiled today that meets all of our criteria to thrive throughout this session has gone up today about 25% on a daily move. The reason for this is because the economy is changing. Consumer preferences are changing. People's minds are changing. You can see that with what's happened right now with Kraft Heinz, down 30%. This is a legendary brand name, but you see a big change in demographics in the U.S. The millennials have eclipsed the baby boomers in size, and soon they will eclipse them in purchasing power. And obviously, you see what they've done to the last election cycle. So I think this is key things that many people are missing out on because they're thinking differently. They're thinking in an old way right now, and there's a new way for people like you and I, our age, that we're thinking in a whole different manner than what our parents have thought.
Well, let me get your thoughts on this, speaking solution-wise and kind of thinking outside of the box about how to send a message to these banksters. One of the Yellow Vest protest movement tactics was to attempt a bank run, and it didn't seem to really pick up any steam. But what are your thoughts on the idea of triggering something like that in order to bring about a necessary change or to send a message to these guys about who's really in charge?
Well, there was a very, very talented soccer player in Manchester United about 20 years ago. A French player. He used to wear his the thing here. I can't remember how you call it in English. He used to wear it upright, and his name was Eric Cantona, one of the best French players in history. And he 20 years ago said, let's do a bank run in France and let's create the system. The problem is that most people, even if you whisper to their ear, if you go to any city in America, you whisper in somebody's ear, the Federal Reserve is private, they're hoodwinking you, they're probably not going to change anything in their behavior. It's the difference between putting information in front of people and putting information in front of people that are ready to accept a message. So I think a bank run is it's a great idea, but I don't believe that the general population will do it. What I think we can do, and I've talked to billionaires about this, so this is not something that I'm coming up with on the spot. I'm telling you after speaking with people that are in the know. If many people would just buy 1 ounce of silver, just 1 ounce of physical silver, you can probably crash the silver market, the silver manipulation, in about 4 months. The futures inventory of silver have about 4 months to go in any given time. Physical, what you can get if you settle for physical silver. If you create a shortage in silver, that will be one of the most important achievements for the anti-banking movement in the world. It has been attempted. It's been attempted by the Hunt brothers in 1980, but two people can't corner a market. If there's millions of people that are listening and are able to do that, that can really change. You create demand on the bullion dealers, you create demand on the smelters, you create demand on the COMEX, and that's how you can change stuff. And it only takes 1 ounce, so you're talking about a $16 investment out of millions of people, and you can really change the economy forever. I'm not telling you what to do, but if you're asking for my proposal, I think buying 1 ounce of silver is easier than creating a bank run. I
would agree. I love it. I think that's a great idea. It's something everyone can do. Plus, you get some tangible assets that you get to hold on to, and that's
exactly. You're not going out of your way to do something. You're doing something that you might have done anyways.
Yeah, I love it. Hopefully that can catch on, because I agree. The bank run idea, albeit a good idea, is difficult for people to actually take that leap. But, actually purchasing some silver is something that you can do and is going to be good for you long-term and short-term. So a great suggestion. Let us know those links again, because we covered a lot of information in this interview, and a lot of people are going to want to follow up on some of this, and you've already put together the comprehensive reports. So give us those links once again so people can make sure to follow up on this.
Sure, and one way to do is to put the links in the description box below. That's easy for people that have asked it several times. So that's one way. The best way to follow what we do, the highest priority ideas and the top quality stuff, is at the free newsletter. That will always be the best way to do it. You can sign up at the homepage. Everything I talked about, if you go to wealthresearchgroup.com to the website and click on the top menu, special reports, it's all aggregated in a wealth library of reports there. You can also browse to wealthresearchgroup.com/top. That'll get you to that page. With regards to the individual links, I'll say this: wealthresearchgroup.com/enemy /attack /drama and /dead are very important and timely. And if you want to understand how Trump is different than any other president in his approach to the Federal Reserve, you should go to wealthresearchgroup.com /Trump as well. I think those links will really be beneficial for people who are interested in financial education, understanding what's going on, and just going out of this brainwash that the mainstream media is putting all over people's faces there 24/7 with bullshit concepts that really steer people's ideas in the wrong way.
Yeah, we have to counter this propaganda, this massive spin machine in a big way. And, I do it here through the medium of video, and you do it very well through the medium of written articles and information. So the links will be located in the description below, folks. I strongly encourage you to check them out. A lot of good information is going to be contained there. Lior, once again, thank you so much for joining us today and helping us break this down.
Thanks, sir. Thank you very much.
We all want truth. The truth will set you free.